Good morning and welcome to the Saxo Bank Morning Call. It is Thursday, November 29th, and I'm here flying solo today, but that shouldn't be a problem. We had late yesterday Fed's Powell out speaking, and the comment that was seized upon as indicating perhaps a more dovish stance is that Powell mentioned that the rate is just below neutral. Well, I think this was taken a little bit out of context. To be fair, I think a lot of people have picked up on this, and we can see this if we look into the more detailed quotes, suggesting that he's pointing to the fact that he said it was just below the range of broadcast that is, or the range of what is broadly considered neutral. So this below the broad range rather than just below neutral is very different. Still, it does indicate perhaps a bit more caution, not only whether he's downshifted a little bit in terms of his actual view on the rates, but perhaps a bit of wariness on the Fed chairman's part on the political pressure being applied very strongly lately by U.S. President Trump. In any case, the market is taking these comments and running with them. If we look at the chart here, we have the December 2019 Eurodollar short-term interest rate future. We can see that we've repriced about 7 basis points through the end of next year. If you look at the rate hike odds going through December meeting of next year, you see that we have the market beginning to favor more and more that we only see one rate hike after an assumed December, in other words, next month, the rate hike. We only see one more rate hike in 2019 or none at all, something like 25 to 27% probability of absolutely no more rate hikes after this next one coming up in December. Broad market reaction besides, of course, interest rate expectations, very strong risk on signal, and I have here an S&P chart showing that we are already bumping up against some pretty important resistance. If we look at the 200-day moving average coming in around 2760, that was often the focus on the way down. And then the really big level I would suggest is that 61.8% retracement at the chart putting it around 2811 here. So if this good vibe continues, I think that'll be the next key focus on whether we can really engineer something bigger here. And of course, with the Fed on a more dovish stance, we're seeing the dollar under significant pressure, especially against risk-on type of currencies, but as well against Eurodollar. And I have the chart of Eurodollar here showing that we've dug ourselves out of this 113 area that was tested, and even below that, and we're all the way back towards 114 as I speak. The big level, 115, that is the red line marked on the chart. That was where the attempt to put together a rally has petered out over the last couple of months. And that's the, that blocks the access to the next area up into 117 plus. I would suggest that we need to see something promising coming out of this G20 meeting, which is the next immediate focus that favors some sense of a thaw, or at least a détente or ceasefire, whatever you want to call it, in the U.S.-China trade showdown. Other dollar pairs seeing even more of a bounce, and one of those that has been quite bid lately is Aussie dollar. I have a chart here as well on that one, and we're really bumping up against the big area here around 73 to 73.25. You can see it marked there with the red line, somewhat of a head and shoulders style setup, and I've put the projections higher. If we realize a full extension of that head and shoulders move, we would see an extension to something like 76.20. The 200-day moving average looms closer to 74, however, but that's pretty close here. I think if we see an extension of this environment and we see the ceasefire détente, what have you, between Xi and Trump at this G20 meeting, Aussie dollar will be one of those currencies that will rally the most together with emerging markets, as this would see significant pressure from the dollar liquidity situation. Finally, on the G20 implications, of course, it's going to impact risk appetite, the dollar, just virtually everything else. Looking at soybeans here, of course, China dropping its import of U.S. soybeans on this trade showdown. You can see the big slide back earlier this year, and the 9 level is a really big one. Ola Henson, our commodity strategist, pointing this out. If we get a sense that China is moving back towards buying U.S. soybeans, we could see quite a move higher through that level. This is not, of course, this is a technical level, but it's all about the headline risk and a binary risk for that market. Finally, let's look at the calendar for today. We've got quite a bit going on, but it's all about an extension of how aggressively the market wants to extend the reaction to Powell's comments yesterday. We do have a flash CPI data point out of Germany. maybe discounted a little bit given what's going on in oil. Same thing for the PCE inflation data out of the U.S. later today. That year-on-year figure expected at 1.9%, a drop from the cycle high 2.0% from September. And then we have the FOMC minutes, which become suddenly a bit of an ancient history given the very, very steep slide in oil prices and the markets being a little bit of a different spot here as we go into these minutes, versus where we were 3 weeks ago when the meeting was happening. Finally, do note that we have, of course, the G20 meeting tomorrow. Sometimes you get a draft communique circulated already on Friday, well before the market close. The actual meeting between Xi and Trump is set for a Saturday evening. This is a very big event. The market has a sense that it's important, but I'm not sure we have a bead on how hopeful the market is that we see something positive developing here. Given how much equities have backed up here, I'm suggesting that it would be quite easy to disappoint the market on the headlines out of this meeting. But as next week takes shape, we'll have to look at where the dollar stands, where risk appetite stands in reaction to this very important event risk. Further out, we have the UK parliamentary Brexit vote. I won't want to spend much time on Brexit today, but I think this deal that May has put together with the EU simply will not fly, and it's going to be about the crash out scenario or some sort of second referendum or some other muddled situation with a Norway-style solution, and we'll cover that more in coming days. For now, that's it for today. Stay on your toes out there. I think the market's going to be heating up over the next couple of sessions in anticipation of and in reaction to this G20 meeting. So be careful out there, and we'll see you back tomorrow with the Saxo Bank Morning Call.